Like if you understood securities law, like you couldn't buy a penny, right? I mean, like I would never buy a penny of a crypto token because they're unregistered securities, which means they're being manipulated in an unethical fashion by a central party. Whether or not the central party knows they're manipulating it or they don't understand. Some people generally don't understand the ethics. It doesn't occur to them that if you change the monetary policy of the token, you have manipulated the value of the token, thereby defrauding investors in the token, right? When you turn off, yields to miners in the ETH ecosystem and you shift it to stakers, you have defrauded everyone that bought ETH based on ETH mining, and you have actually robbed the miners of their property, right? You have devalued their property. So normally when you devalue the property of your securities holders, right, there's class action lawsuit, right? They would sue you because you stole from them. Just like, in any public company, if you just got up and you said, we've just decided to unilaterally devalue your security. We've issued another class of security and given it to our friends, and we didn't tell you. You're going to get sued.
Bitcoin has been the world's most popular cryptocurrency for many years now. And while crypto has seen incredible price hikes in the past, 2022 was an undoubtedly disastrous year for this asset, which faced an overall price drop of over 60%. So why did Bitcoin's price fall so drastically throughout 2022? Let's find out.
Like the venture capitalists that were supporting this and endorsing this, they lost their money. And so they've been discredited. And then the crypto hedge funds, the Three Arrows, et cetera, that were supporting this, they lost their money. Right? So people are saying, why are you investing in this unethical, poorly engineered, batshit crazy idea? We're making money while you lost all your money, so hopefully you'll stop, right? So the actors like Celsius and BlockFi and Voyager, they were making crazy loans and engaging in extremely risky behavior. They lost all their money. They're shut down. So the failure of all of those entities, is in itself kind of a natural remedy in the market.
Yeah, definitely. I think this is probably a great spot to wrap this up. Do you have any closing thoughts? Maybe what's the next catalyst for the next bull run, or what do you want to leave people with?
Yeah, I think the catalyst for the next bull run is an educated market and an educated set of policymakers and regulators and educated media. And what we've gotten over the past 6 to 9 months is a very expensive education. Right? People learned a lot from Terra Luna. They learned a lot from Three Arrows. They learned a lot from the meltdowns of Voyager and Celsius. They learned a lot from FTX. I think that if you look at coverage of Bitcoin and the crypto world on CNBC, on Bloomberg, in the New York Times, in the Wall Street Journal, in most mainstream media, it's much more sophisticated today than it was 12 months ago. I think, before we say, Bitcoin, not shitcoin, but now you say, oh, Bitcoin, not FTT. Do you understand the difference? Like, oh, I get it now. Yeah. Bitcoin, not Luna. The Luna thing went to zero. Why? Because it was backed by nothing. Right? We used to say proof of work is better than proof of stake. Well, why is it better, right? Proof of stake could do whatever you want. Well, proof of stake is what FTT was. It was backed by one person. That was a mistake, right? Now when you try to explain why is it that you would want to have 10 gigawatts of energy and millions of Bitcoin mining rigs running the network, it's because you're actually backed by something tangible. And the alternative is you have Luna and FTT and Serum backed by air.
Bitcoin is around 70% below its last all-time highs, and the drawdown has flushed out many short-term investors. The FTX scandal precipitated an even stronger capitulation, one which is ongoing as its after effects see nervous investors panic.
The primary impediment's been FASB or GAAP accounting. The GAAP accounting, if I made a list, at the top of the list would be indefinite intangible accounting. It's toxic to a public company balance sheet. That's the number one issue. I think the number two issue is the volatility of Bitcoin, which has been driven in large part by the market manipulation of the crypto exchanges, especially the offshore crypto exchanges. I think that's the number two thing. The FTXs of the world trading with 20x or 40x leverage with counterfeit stolen money. I think that's created volatility. I think the third is the reputational toxicity of having the asset class conjoined with the crypto casinos. So if you're a really large, legitimate company, if you bought $1 billion of Bitcoin and doubled your money, you would be showing that you lost $800 million. I mean, it's an obvious strike. And then you'd have to explain to your outside shareholders what Bitcoin was, and then you would also have to deal with all the negative publicity that comes from the blow-ups of a 3 Arrows or a Celsius or a BlockFi or a Terra, Luna or FTX. So if you've got a really, really good business and you've got other things, then this is a distraction. You don't really want to get distracted by it. If you had a business where the majority of your assets were cash, and you saw the cash was generating 0% yield, then it becomes more interesting. You just have to be sort of a private company, or you have to be closely held. So a lot more private companies and family offices and the like have discovered Bitcoin because they don't have that gap overhang issue. And they've got a smaller group of decision makers that can more easily get comfortable with Bitcoin. And you have to be committed to hold the Bitcoin until the crypto excesses go away, right? Until the crypto industry gets adult supervision, and 98% of the bad actors get squeezed out, and the big exchanges all get regulated, and they become transparent. At that point, then this is a much easier decision. But we're kind of in this this transitional period where the industry is transitioning from the first decade, which is entrepreneurial and offshore, and anything goes, kind of Wild West, and then we're, the next generation, maybe we get through that chasm by 2024, and from 2024 to 2034, it's more like institutional mainstream adoption, where you have trustworthy, transparent institutions, publicly traded companies, regulated institutions, big institutional investors, big public corporations.
After the May 2022 crypto crash, many thought that the worst of 2022 had passed, but this was certainly not the case. Instead, November 2022 had a particularly disastrous event waiting: the collapse of FTX. FTX was once a hugely popular crypto exchange used by traders worldwide. Launched by Sam Bankman-Fried and Gary Wang in May 2019, this platform was a promising name in the crypto industry until it was revealed that there was a severe liquidity issue being faced. In November, FTX paused withdrawals, meaning users could not move their funds out of the exchange. When this happens, it's usually a bad sign. However, in the case of FTX, there was simply not enough money available to fulfill withdrawal requests. So, the platform took away the ability to make these requests in the first place. Furthermore, FTX was set to be acquired by Binance, another crypto giant. But this deal fell through amid the controversy surrounding FTX and allegations against Bankman-Fried. Shortly after this, FTX filed for bankruptcy. This was huge news, as FTX had established itself as a successful and reputable platform. This gave investors cold feet and led to another market-wide crash, likely prolonging the so-called crypto winter.
I think a lot of the crypto services have been poorly engineered. Like they had defective economics, defective ethics, and defective engineering. For example, like if I took $1 million of Bitcoin, I loaned it to you, and you took it and put it into some DeFi protocol backed by Terra Luna, You bought UST. Okay, that's a defective yield approach, right? And it's defective because you're generating some air token that you're printing, and you're paying the 20% yield with air token printing. Okay, that's economically not sound. That's ethically not sound because probably it wasn't disclosed. They never disclosed the full extent of the assets, right? And it's engineering not sound because the natural frequency of the network was so high that in the event that the price moves down for a couple of days, the entire network goes unstable, shakes itself apart, and collapses.
So, do you agree with Michael Saylor's thoughts on securities and altcoins? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.